Boom. We are live, ladies and gentlemen. Hopefully the stream goes smoothly. Internet in the jungle, in the middle of nowhere, is always a little bit tricky. But with that in mind, we're going to be taking a look at Bitcoin and Zilliqa today. We'll keep it very simple when we go over THO's token tangents over the next little while. We had a fantastic podcast with David Hornick. Guy has over like $3.5 billion in assets under management through August Capital. What a great gentleman we had on yesterday. So excited about that. But with this in mind, let's basically dive right in and we'll take a look at what's going on in Bitcoin here. So I'm still following this Wyckoff distribution model. So for those of you that have been following this along well, we're looking for this return down into the D phase, and I think we're going to go to around 8,800 on this next dip down. We've currently closed well below the 50-day moving average and well below the 21-day moving average. Now, I'm not going to even dip into the monthly, but we'll take a look at the weekly just kind of to give a compare, and the 3-day actually, the 3-day and to compare. So on the 3-day, which is a really nice chart too, I'm always a big fan. We can see that we're right up against the 21 3-day moving average, and the 53-day moving average is down here around 8,500 near the bottom of our box range that we have been watching. So on the daily being below the 50 here, I do suspect this is going to bring us down to around 8,900. And this is the same chart we've been following for the last little while. So if you guys want, you can follow us on TradingView, where we made this initial outlook when we were back at around here at $10,000 on that second UATD test. Now we've made a few other kind of outlooking ones, which we'll go to. But in the meantime, one of the things I really want to highlight is the Fed's ability to stimulate this market. One of the reasons why I believe we've seen so much dramatic up in the tech stocks is from the inherent nature of money printing. I think this has boded well for Bitcoin as well. Now, I think the world is really going to come around to the fact that this is a multi-year thing that we are not going to recover. You know, in reading Nassim Taleb's book lately, he talks about how at the beginning of the 17-year civil war, everyone was always like, oh, this is only going to last a little bit longer, just a little bit longer, like we'll figure it out. And 17 years later, people were still saying the same thing. So I think inherently we start to think that we're going to digest these processes a lot easier, and I believe that that is not the case. I believe that the pandemic that we're in right now is going to be a multi-year process. We're in 3, 5, 10 years out. So with that in mind, I always want to take a 3 to 5 to 10-year outlook, and here finding a retracement back to the the $6,000, $7,000 area is actually very healthy. For anyone that's been in this market long enough, I bought my first Bitcoin at $90. You'll recognize some of the things that I'm about to show you. Now, for anyone that's been trading for a really long time, you'll know that healthy markets consistently retest the 21-day moving average. Here you can see even on our run up to 13,000, we tested at 1, 2, 3, 4, 5, and then 6 and 7. As soon as we broke through that 21-day moving average, that's when we really started to fall. Now, if we go further back here, I went over this briefly the other day, but I can't stress how important this is in my sentiments for when I see a healthy bull market and when I'm really going to start to lean into this market. I'm going to wait till it's healthy and see all the way back down here in 2016. You can see that we retested this 21-day moving average multiple times before we ever started to continue to go upwards. We went 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 to 14 different retests of that 21-day moving average between the prices of $247 and $1,100. So if we take today's current space and we look at where we're sitting now, we can see that we have not yet found any support on this 21-day moving average. We've actually fallen through it multiple times. Until we really see that, I'm not going to be confident in a bull market, especially when we have a big gap down here between 6,000 and 3,800. Now, I've made arguments that this gap may never get filled because we know that a total part of the liquid supply of Bitcoin has been lost to garbage dumpsters and just the space of time through people losing wallets, private keys, etc. So this gap may actually never get filled. And this is where it's going to be really interesting to see how this plays out, is where does the market take us next? Now, I'm not going to sit in a bullish space in this market unless we see Fed liquidity. Right? So when the market started to collapse in March, we were excited because that made sense. Most of these companies should be failing. Hertz, as a company that's in bankruptcy right now, is currently up like 400% versus its drop since March. So how is it that we're ever supposed to suspect that we're finding like true market price sentiment and analysis? It's not been there in any way, shape, or form. And I think that that's one of the hard things right now, is that people are getting too excited for a bull market. Now, I watch all these different YouTubers who are constantly talking about $100,000 Bitcoin, and I agree with them. I'll say this multiple times. I think Bitcoin is going to $100,000. But if you're new to the trading space, which you probably might be, take a patient approach. Take that long time frame, 10-year outlook, because that's definitely where we're headed right now. We could come back down to fill this space, and we could see we might see these movements either sooner than later or not. And I think that's one of the most important parts as an investor to recognize, is that I'm just going to keep investing. I'm going to keep putting money or currency into assets that are appreciating, right? Whether it's property or businesses and equity that I think will do really well. I've actually been more and more getting interested in venture capitalism because of that relationship with the early startup phase of companies and the cool core missions that we're seeing come out of this phase of the business suite. So although I think Bitcoin and blockchain, and I really, really do believe this, are going to eat every single aspect of our modern day experience, from social media, data, on like the browsing history, etc. You'll be able to monetize all of that. I think it's going to take a lot longer than most people suspect. So if you're new here and you're jumping in, you're listening to people about Bybit and you want to go leverage long 150x, you're probably going to lose all your money. I don't suggest you do it. Just take a simple approach. This is going to take 10 years to evolve, so just keep investing small or whatever you can on a monthly basis. Now, from a trading perspective, this is where the volatility becomes fun, is because I know after almost a decade of kind of playing in markets now, I've confirmed to myself how I play. Now, everyone manages risk differently and everyone focuses their own intention differently. So on a trading perspective, I still think we're coming down to test this 87 point. Now, if we continue up from there, amazing. I'm going to lean into longs like a friggin' maniac. But if not, I'm going to be patient with these markets, because that's what a good investor should do. Now, I'm going to jump in. I'm going to take a look at Zilliqa here. Now, I love when the bear family finds stuff like this. This looks like it had been forming a beautiful cup and handle. Now, for anyone that's been in the trading sector for quite some time, you will know that cup and handles are supposed to take weeks, if not months, to evolve. If you're charting a cup and handle and it's in a single week or 2 week time frame, it's not a real cup and handle. These things take week or months to evolve, and that's what we would like to see. So we had Jerry from the Bear Den write this up a few days ago about this potential of a cup and handle. Now, I do believe that we'll probably see a retracement down to the 150, 160 for this handle, just because there's a big gap here. But on the continuation of that, that's where I'm really going to start to get interested, is once we bounce off of that area of support and continue out with Zilliqa. Now, I think this space has a lot of room for adoption, and in general, having exposure here is probably going to bode you very, very well. I think one of the things we will see over this decade too is probably the total consumption of markets. Like for instance, equity in Tesla. Like if I could own equity in Tesla via the crypto market, I'd be in Tesla right now. But I don't really want to go through the NASDAQ and sit on an account that's in America, like through the American jurisdictions and et cetera, right? And then I have to pay American taxes on those because... So the long story short, I think we're going to move into a market that effectively turns all of this into tokenized assets, right? Whether it's property, equity in business, or the financial system itself, browsing data through companies like Brave and the BAT token, Theta, and what they're trying to do with the consumer market around content creators. This is all a huge sector that's in its early days. So again, what's fun here as an investor and a trader is watching how these markets react, how Bitcoin and Zilliqa interact with one another. So you'll notice I'm not charting Zilliqa versus the US dollar because I really don't care what it's at in US dollar prices. I want to know its relationship with Bitcoin, and does it find consistency? Is it still growing versus Bitcoin's price? And just as a quick example here, we'll show Link. Here's one that flew under the radar for me for a little while all the Bear family had been, like a bunch of the Bear family had been investing into it, and this is its relationship against Bitcoin. It's been consistently rising, and since 2018, you've seen a 1,450% return against Bitcoin's price. Now, so since 2018, would you rather be holding Zilliqa or Bitcoin? Well, all the maximalists would say you'd rather be holding Bitcoin. But that doesn't make any sense. It doesn't make any sense to invest in one area alone and become this person who talks about shitcoins. It's such a high level of ignorance to speak like that. And it generally means they have very little experience in the traditional markets, because there's so much room for so many different types of companies, right? Like you might own a coffee company in Chile that's killing it, and it does great for your little market niche. We can't ignore that. We can't ignore how much of the market is made up of those small players. So to become a maximalist in any sense of in the investment word means you're married to something, and it usually fails you at one point or another. Again, perfect point and stake is if you were to sit in all Link versus Bitcoin over the last 2 years, you're looking at a 1,400% return on investment versus, let's say, 2008 in January of Bitcoin, right? Let's say, well, I mean, and again, I'm not comparing these two from a technical perspective, because I don't think you can do that. Just from a technical analysis perspective. So let's say you bought Bitcoin at the high of January of 2018, and you're sitting at a 34% loss in Bitcoin versus Link versus Bitcoin, which is a 1,470% gain. So again, don't get married to anything here. If you're a good technical, savvy, fundamental investor and you can find things like Chainlink here that do really well, why would you not want to have exposure to that? Why would you not want to have exposure to things like Zilliqa, especially when you're seeing these really long accumulation signals right at the bottom that suggest we should be buying? And I'll give an example of this here where we were watching Fetch last week. Now, we made a call with our private bear family here on Fetch for around a 40 to 50% gain. This is where we took our entry. This is where our stop loss was set. We had a 10% stop loss ratio to a 40% gain ratio set up on this trade. Now, again, this is against Bitcoin's price. So this was over the time that Bitcoin has been sitting stable. We saw a 40% gain of Fetch. So here we saw, boom, and I think we're going to reach the top of this probably next week. But these beautiful accumulation phases, these technical indicators they still work, right? It's just about understanding what technical analysis does for the trader. Technical analysis isn't really for the investor, it's for the trader. It's for people looking to enter and then exit a position, right? Not just hold onto something for a very long period of time. And you have to view them differently. So for any of you guys want, you can sign up for our free newsletter by going to arcanebear.com, and you can sign up for our paid kind of VIP group there as well. Got hundreds of members in there, very well-educated investors and traders, and we keep out all the flack. Again, this is not a hype group. There's no signals or calls. We want everyone to be educated enough to make their own trading decisions and their own investment decisions. And I really believe that starts with well, first off, your own education. Invest in your own education as best as you possibly can. But more importantly, learn to practice and learn from others. You know, that's one of the things that I've really strived and done well with over the last few years is learning to drop my rigid beliefs and kind of look at the way others see the world and be excited about the way they see the world, because they probably see things that I totally miss. And there's value in that. Anyways, I'll leave it at that. This is Tio with the Arcane Bear, our quick look at Bitcoin and Zilliqa for today. I hope you have a wonderful weekend. We will be back tomorrow with some beautiful philosophical wealth, and we'll be posting music, I think, every Sundays, just to kind of balance out the technical and fundamental stuff that we're looking at. We've got a few more great podcast guests coming up. Brittany Kaiser from the Cambridge Analytica and her new Own Your Own Data Foundation. We've got a few other great podcasts in the future coming up with you guys as well. So thank you for all of your support. Give us those thumbs up if you like this content. Leave your questions, your comments down below. And again, just we'll leave off with this. Data Dash or Nick Merton from Data Dash started this beautiful wallet called DigiFox. I sit as head of branding and giving. We're working on some really cool ideas together. If you want, download the app. Take a look, both for iOS or Android. You can download it in your app store. Leave us your feedback. Follow us on Twitter, all those fun things as well. I'm really, really excited for what Nick's put together. I believe projects like this are going to make a huge difference in the future, and I believe that brilliant people like Nick will drive us into a beautiful space in finance for everyone. So this is Tio with the Arcane Bear. I'm signing off for the rest of the day. Thank you guys all for joining us, and I will see you guys again on the other side.